Good afternoon, everyone. Welcome to Hit the Bid here on March 8th. This is Ty Robbie here through Week 10 Market Watch. Today we're going to run through these charts and see what happened in the markets over the last week and see what we need to look forward to as we move into Week 10. So let's jump in and get started. First on the board today, we got our April live cattle. Did see mixed action here in this cattle market last week. Prices seeing big swings both directions as both feeders and fats did see an uptick in volatility. This April live contract opening up here with a big gap down on Monday. However, price did gap down right into prior support. Low of the day on Monday, stepping in at 228.5 off that opening range and seeing a nice strong rally into the close there on Monday. That upside did spill over into Tuesday and Wednesday session, seeing a nice continuation of that dead cat bounce here off that 228 level. Price rallying up here into that prior week's point of control and supply zone. As we can see here, all those sellers at last week's point of control stepping right back into this market and providing some resistance up here between 239 and 40. We did see Thursday's action with a nice strong rally off that opening range. However, those sellers stepped in and kept this market off those highs here throughout the remainder of the day. This really set those bears up for a nice move into Friday. Those bears did exactly what they needed to do with the big breakdown there early on Friday, driving this market on increasing volume back down here to 33.67, finishing the week at 34.32, below that prior 20-day low. This is confirming a lower high here for this cattle market, continuing with this downtrend after last week's breakdown below our 234.5 level. We did just see a little bit of a dead cat bounce off of this prior support, but with that lower high coming in and those bears finishing the week the way they did on Friday has them set up for a continued downside as we move into week 10. Look for early offers on Monday's session below 233.67 here to keep that selling pressure on. Bears are going to try and strike quickly and fast here, so look for them to try and get a quick mark down back to prior week's low here at 228.5. If we do continue to see continued selling pressure and offers below 28.5, this thing should start to chunk down, and we could see this cattle market start to get slippery. Next stop below 28.5 is going to take us to 222 and then 218 beyond that. So look for the selling pressure to really start to kick in here and those bears to keep driving this market lower. With this lower high and this cattle market failing up here a couple times right around 44.5 and these lower lows and lower highs here really confirming with this downside. Cattle market failing to get back up here to fill this prior overhead gap and those all-time highs. So just not a really good look here, as we did see more weakness over the last week or two, failing to get back up to those all-time highs. So look for more downside to come in the week ahead. If you didn't use last week's opportunity to get defensive and raise cash, I'd encourage you to do so quickly. Offers below 33.67 will keep the selling pressure on. If we continue diddling around here between 34 and 40, just look for more choppy action here. But those bears still remain in control as long as we trade below 239.95. Bulls need to get a close up here above this bull pivot at 240 and chew through some of this overhead supply to get any more chance at some more upside. But in the meantime, looking like this cattle market's going to be seeing some downside. Technically speaking here, this market, this picture doesn't look very clean, and we should see those bears continue to attack this cattle market. So be cautious, be defensive here, and look for offers below 33.67 to keep the downside pressure on this cattle market, and we should see those that selling pressure continue to slip in as we move into week 10. Next up, we got our April feeders on the board. Same story over here in this feeder market with that big nasty gap down on Monday, pushing right down into 345 to 346 area, this yearly opening range low. Nice bounce there, seeing that dead cat bounce off that 200-day average and the yearly opening range low. Seeing this thing push off of 45 right back up here into the low 60s. However, Thursday's action also seeing some of that resistance at this prior week's point of control. Sellers stepping in and getting aggressive here late on Thursday, setting those bears up for a nice breakdown here into Friday's session. Above average volume here, increasing selling pressure, typical distribution day as this cattle market is rolling over. Lower highs and lower lows here in this cattle market, or in this feeder market, and looking like those bears are going to keep on attacking here. Look for continued offers as we move into next week below 350.35 here to keep that selling pressure on. Next step is going to be back down here to 345, and continued offers below that should see this market really start to slip. Look for this thing to start chunking down here into the 330s, and the selling pressure really should be on. And encourage everyone to be defensive, continue to raise cash here if you haven't done so already. More downside in the week to come should get this cattle market to start to accelerate to the downside. Bulls need to get a rally back up there above 361.60 and still has some overhead resistance up here between that point and 365. This box right here is going to continue to keep resistance and selling pressure on in this market until the bulls can get a close above this. We aren't going to be expecting much upside here, and those bears should be in control as this new downtrend takes effect. Look for more downside pressure to take this cattle market lower as we move into week 10. Next up, our May corn futures on the board. We did see kind of a mixed action early. Monday, Tuesday, and Wednesday's action kind of seen some choppy action down here around 445. However, the bears failed to get this market back down below these prior range lows. Bulls coming in and seeing a nice strong drive here throughout Thursday and Friday's session from these range lows all the way back up here towards 460. Bulls finished strong here last week, but we still remain in this prior range between 445 and 465. Until we can get a close beyond the edges here, we expect to see these range-bound conditions continue. Bears will be waiting up here between 60 and 65, so look for them to try and offer some selling pressure here early in the week ahead. However, if we do see this buying pressure continue to slice right through the top end of this range, look for those bears to fold and really just throw fuel on this fire here, and we could really see this thing start to accelerate to the upside. Similar to what we're seeing in this crude oil market, prior range-bound conditions keeping market capped, but then once that top end gives up, we see a pretty impressive short covering rally, and we see a big spike. Obviously, crude oil market's a little bit different given the new situation in the world, but technically speaking, that's the exact same picture we're looking at right here. Look for these range-bound conditions to keep this market held between 445 and 465. Bids above 465 should get all these prior sellers to start to fold, and that will really put the buying pressure on this market and spike it back up here towards $5. So we want to make sure that those bears can step in and offer some resistance up here at the top end of this range. If this thing does balance out here in the early part of this week, look for the sellers to step in and drive this market back down towards these range lows. But we'll just have to wait and see what kind of battle we get up here in the top quarter of this range as we start off the week. So look for selling pressure early this week. Look for the bears to try and keep this market capped here, but don't be stepping in front of this freight train that's running higher that we saw late last week. We want to see this thing settle in here and balance out before we commit to any downside, as those bulls could see a nice strong push up through here as well. We just want to wait and see. We'll monitor this situation throughout the early part of the week. If we see early resistance, we would expect to see those range-bound conditions continue, but just be cautious of close back up here above 465s that could really get this corn market to take off. In the meantime, we expect to see this 445 to 465 range hold, but close beyond the edges will confirm a new trend direction. So keep an eye on 465 here as we start early this week. Next up, crude oil prices. This market went up a little bit last week. Might have seen it in the news a little bit too. We did see a big open here on Sunday last week with a gap open up here to 75 that was initially sold off. This market has, in the last year or two, really sold off any sort of escalations over there in the Middle East. You'll see a nice spike here, gap or rally right up here into the $80 mark where we did see some resistance. That's what it looked like we were starting to do early last week, but this situation over Iran continued to escalate all week long as this crude oil market did rally here throughout the late part of the week, seeing as much as a 12% up day here on Friday. Prices rallying all the way back up there towards 90 to levels we haven't seen in a couple of years now. So dating back to 2023, this is the first time we've been back up to this $90 mark. So in the meantime, we expect to see this volatility continue. This is obviously a very bullish move here, so we expect to see this upside continue here while this market is at the mercy of the news. Look for more volatility and some wide swings here. This market is going to continue to be pretty wild and crazy here over the next couple of days while it digests the situation. Just continue to see more upside here until we can get more developments out of the situation over there in Iran. Be cautious here. These swings and volatility in this crude oil market can be crushing, so be cautious in this market and look for more upside here if those bulls are to keep on driving here above 92. And our equity indexes continuing to slip a little bit last week. Did see some early volatility with some big gap downs there on Monday and Tuesday's action across both of these all of these indexes, that is. The Dow being the weakest of the bunch last week, slipping down here below this yearly opening range low and our major moving averages, kicking this Dow into downtrend territory. Now we see the S&P and the Nasdaq still kind of stuck in this range. The S&P weighing heavy here late on Friday, driving down here towards 67.15 at the lows. If this market continues to put pressure down here on these range lows on the Nasdaq and the S&P, look for continued selling pressure to take these indexes lower. We're going to start moving into a corrective environment now that the Dow, which has been the leader over the last couple months, has moved into bearish territory and broken down below these prior lows. This is setting up these other indexes to fail as well. Should be weighing enough on this stock market to start to roll it over. Look for a corrective environment here over the next couple of weeks. This thing should continue with some downside. Look for offers below 67.15 in the S&P to keep the selling pressure on. Mega cap names still seeing pretty mixed results as we do see good back and forth action, but these indexes just continuing to look heavy here and looking like they're going to continue to roll over. With that Dow starting to put away weight on things now, we should expect to see the Nasdaq start to follow as well, and really get these other indexes to start to spill and slide to the downside here as well. So be cautious. Look for any offers down here below these range lows as an opportunity to raise cash and get defensive. We are going to start moving into more of a defensive environment now. We are starting to see some of this weakness spill over into those leading sectors as well. A lot of those leading growth stocks still are also seeing some downside and volatility here as that weakness is just starting to reach all corners of this market. So be defensive, raise some cash here. We should see some better opportunities in the year ahead, but now is not the time. We need to see these charts get cleaned up here and provide some better structure and points to trade around. In the meantime, be defensive and take a step back here while this stock market sorts through some of this volatility and weakness it's been experiencing. There will be better days to get invested and put some money to work. In the meantime, be defensive here and protect yourself as we could see some downside and a more corrective environment start to come into the stock market. Thank you everyone for tuning in tonight. Thank you everyone for being with us here this weekend. We will catch you tomorrow night for closing comments. Have a good evening.